Today, I'll take you through the highlights of 2020 for digital health in the United States, and I will relate them to the global ecosystem so that you have a full picture, which you can enhance by going to the other 3 reports that are posted on our research page on our website. So let's start at the end of 2019. At the end of 2019 and going into 2020, global digital health had finished on a high. They had had a record year in 2019 as far as venture funding, but key stakeholders were primarily focused on macroeconomic conditions, and they were concerned about a global economic downturn. Now, you all know how 2020 turned out. So let me walk you through the consequences that the global pandemic had on digital health itself. So in 2020, before we dive into the US in specific, let's look at the global picture. Galen growth is focused globally, has unmatched coverage around the globe on digital health venture funding. And the global funding in 2022 for digital health was a record $25 billion deployed across the globe in 932 deals. Now, that's an increase of 34% in funding from 2019 and a decrease in 14% in deals. So what is that? When you have an increase in funding and a decrease in deals, it means investors are becoming bolder and more confident in the future of digital health. And digital health ventures really found themselves at a right place and right time in 2020. It's evidenced by an increase in IPOs as well as mergers and acquisitions, evidenced by global government and insurance policy that has been reshaped to encompass digital health records and telemedicine. And as well, patients have been driven to go digital due to restrictions in physical presence. The increase in funding for 2020 is primarily being funded by the US and by China. The US has taken 68% share of that funding in 2020. The graph that you see on the right-hand side, the United States recorded a record $17.04 billion in venture funding in 2020. That's 68% of global funding, and that $17.04 billion is an increase of 59% from 2019. In comparison, Asia Pacific closed at $6.14 billion, 25% higher than 2019. Europe closed 45% down from 2019, and the Middle East also closed down by 16% from 2019. So the United States and Asia Pacific both surged ahead in digital health funding in 2020. But not only did they surge ahead with funding, they also went big in their funding. There were 93 mega deals recorded in 2020. Mega deals are funding deployed greater than $100 million. And of those 93 mega deals, 69 of them were closed in the United States, followed by Asia Pacific with 21 deals. That leaves 3 mega deals for Europe and the Middle East. So you're starting to get the picture, right? The United States continues to be a good place to be for digital health ventures. If we break that funding down into quarter-on-quarter analysis, the blue bars that you see are the funding amount deployed in the United States. The funding amount, with some quarterly fluctuation, has been increasing from 2016 all the way through 2020. In comparison, the green bubbles on the top show the number of deals. So the number of deals with some fluctuation has remained relatively constant. When you have constant number of deals, right, increasing total funding deployed, the result is, of course, higher ticket size. The average deal size from 2016 to the middle of 2019 has increased steadily. From the middle of 2019 through the end of 2020, the average deal size in the United States has increased significantly. The slope of the line is skyrocketing, which means that the total average deal size in the United States has increased significantly. In fact, the average deal size in the United States was an unbelievable $38.3 million for venture funding, and that's up 70% from 2019. If you want to compare that to the rest of the globe, the average deal size in Asia, the next largest global market, was 26.4 million, whereas the average deal size in Europe and the Middle East were 9.3 million and $10.7 million respectively. The United States has a significantly higher ticket size for venture funding than anywhere else in the globe. So the next question is, where is that funding going? How do we segment the market? And if you when the market is segmented by stages, by funding stage, you see where the majority of the venture funding is going. The early stage and Series A ventures have received significant funding compared to 2019, with early stage being slightly higher and the Series A funding being slightly lower than 2019. Series B has a significant increase in 2020 compared to 2019, but Series C and Series D and beyond both increased by more than 2.4 times year on year. We attribute this to the global pandemic and the preference for more mature ventures that tend to be less risky. This is obvious in an economic downturn, then the investors turn to the less risky ventures. And since we're looking at the funding stages, let's discuss the venture exits. Exits contributed significantly to the U.S. digital health ecosystem, resulting in a total deal value of $57.9 billion, up 4.2% from 2019. We compare that to the global picture. Total global deal value in digital health in 2020, which includes venture capital and exits, closed at $71 billion, up 3.2 times from 2019 across 1,025 deals. So again, the United States beat the global average of 3.2 times by being 4.2 times the value in 2019. Now let's take a deeper dive. Galen growth segments the digital health ventures by clusters, and then further, each cluster is broken down into different categories. The best way to understand the digital health clusters is to look in our report at the digital health taxonomy, which is on slide 44 of the report. The top 5 most invested digital health clusters in 2020 were telemedicine, health management solutions, online marketplaces, wellness, and research. Those top 5 represented 59% of the total funding deployed in 2020. Telemedicine took the #1 spot, with the largest deal being $200 million, Series C funding going to Roe. And telemedicine, for more information, includes teleconsultation, teleradiology, telepathology, and telesurgery. So with the globe being deep in the pandemic, there's not much surprise here that telemedicine reaches the top of the list of the health tech clusters. And we saw this in other places across the globe as well. But the detailed funding information for telemedicine is quite interesting. The funding volume in telemedicine increased 28% to 78 deals. So while there was only a 28% increase in the number of deals in telemedicine, the total funding deployed, in fact, increased by 4 times compared to 2019. So that's a significant increase in the funding deployed, whereas the number of deals didn't increase as much. The total funding was significantly driven by growth in late-stage ventures, growth and late-stage ventures, including Series C investment round by ROA that we've already discussed. And notable as well in telemedicine are the mergers and acquisitions. And that includes Teladoc acquiring InTouch Health early in the year, and then merging with Livongo in the second half of the year for a remarkable $18.5 billion deal. Amwell, another teleconsultation company out of Massachusetts, had $6.48 billion IPO in September. So almost 50% of the exit deals in the U.S. happened here in telemedicine, which is quite remarkable. Further on this slide, you can see that the value propositions offered by telemedicine didn't change much to 2019. So we see that the growth in telemedicine is quite constant, although the ticket size has increased significantly. Treatment, the value proposition of treatment tops the chart at 22% and has the highest focus within the ventures in the telemedicine space. I'm going to shift gears a little bit and go and segment the market by therapeutic focus areas. The top 5 therapeutic focus areas represented taking 33% share of the total funding deployed in 2020. So that means that the funding in the therapeutic, across the therapeutic areas was very much spread out. But on the top of the top therapy was oncology. Oncology has commanded significant funding over the past 5 years and has been on the top of the list, somewhat consistently on the top of the list. Infectious diseases was number 3 on the therapeutic focus chart. And we're not going to go deep dive into infectious diseases tonight because deals for Q Health account for almost half, or more than half actually, account for $594 million in 2020. So a significant amount of the funding in infectious diseases was actually accounted to only one venture. We want to deep dive right now into mental health, which recorded a total of 53 venture funding deals to achieve a total of $1.48 billion of funding in 2020. Mental health startups are not a new COVID trend. As you can see, the deal volume didn't increase significantly, but the funding for mental health more than doubled. The highest value deal was $175 million by Lyra Health, and you can see in the graph that there was a steady influx of funding, not only a few mega deals contributing to the mental health boom. Mental health became a big topic in 2019 and has increased and has continued to mature across the digital health space. Within the mental health therapeutic focus in the United States, most ventures are focused on teleconsultation, with the primary value proposition of these ventures being in the adherence space. Globally, to put this in perspective, the United States has the most private mental health ventures as per January 1 to 2021, with 34% of the total mental health ventures globally. The highest concentration of ventures, 44%, as well as the most funding within the U.S., greater than 50% of the total funding, is attributed to mental health ventures that are located in California. For those of you who are interested in mental health or are doing research in this area, I encourage you to go check out our mental health report that we published in 2020. It can be found on the research page of the Galen Growth website. So back up to a summary and look at the total global picture and the total digital health funding history in the United States. For the U.S. ecosystem, the first quarter of 2020 had the highest deal volume, while mega deals in the second half of the year led to the top funded quarters in global history for digital health funding, with $5.04 billion in Q3 and $5.26 billion of funding in Q4, respectively. If 2021 follows the same trend as the past 4 years, with the strongest quarter for deal volume happening in the first half of the year, then the sky is really the limit for digital health ventures as the economy recovers throughout the rest of the year. Despite the pandemic, investors in the U.S. have kept focused and they've continued to support ventures. There may have been a shift in focus to the late stage, more mature ventures, but the early stage ventures certainly haven't been starved. And we see the trend of investing in the growth to late stage ventures waning in 2021 along with the economic recovery in the U.S. We expect to see investors switch to an offense play as they step up their efforts to transform their value chains and to meet society's new healthcare expectations of both incumbents and new entrants. The extremely low cost of funding and the brightening economic outlook will be major incentives for mergers and acquisitions, as well as other exit deals. This is supported by healthcare regulations, higher adoption of levels of digital health, and by maturing ecosystems. Remember all that funding that was shown pouring into the late stage ventures in 2020? Look out for exit deals to accelerate in 2021. Now, before I conclude, there's one more important point that I want to bring into the conversation. While it's included in the data, what we haven't discussed in detail today is that the insurance industry is facing a paradigm shift, the likes of which hasn't been seen in history. The landscape has never been more competitive, with much research claiming that the insurance is among the most at risk of disruption from new tech innovations. So far in 2021, we've already heard announcements of a $13 billion investment in this area between Change Healthcare and Optum. So Galen Growth is excited to have InsurTech among our focus areas for the new year. And with that, we appreciate your questions, and I will hand the presentation back over to Julian, who will then walk us through hopefully some of the Q&A.